Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. You already know what to do. Hit the like, subscribe, notification bell. And if you've been rolling with me, hit the like. Hey, the Feds are going to be talking today. Fed, F-E-D. And they're going to be talking today, which is Wednesday, and tomorrow, which is Thursday, this afternoon. They usually put out speaking points. We're going to see the market has been actually reacting to this 2 day and these 2 days that the Feds are going to be talking. And they're going to be talking about tapering and, with the bond buybacks. And they're also going to be talking about interest rates, higher interest rates or raising interest rates. The biggest threat to the market now is higher interest rates. We know that it's coming. It has to come. And so it all depends on what the Feds say. If they say that they're going to raise them earlier, then it's not going to be good for the market. OK, and so we're just trying to wait and see what the Feds are going to say. The Fed is going to say. All right. But here, fair evaluations or fair multiple companies is everything. Riding on it. And so leading up to now, the ones with the high evaluations were getting beat down, and the fair ones were the safer ones to be in. Now, here's what's crazy. Remember, anything I say is not a suggestion for you to buy, hold, or sell a stock or crypto. Here's what's crazy. The high multiple companies and the fair multiple companies are in a lot of sectors are going down because we don't know. There's a lot going on. We know we got the Omicron. We know that it's not severe, but it's spreading really fast. All right. And so that's a threat to economies. Right. So there's a lot of things that are going on. People are locking in losses for tax write-offs. That's going on right now. And so all of these things are affecting the stock market, which in turn affect the crypto market. OK, good people. For instance, let's look at this. Check this out really quick. So here is Goldman Sachs, right? Goldman Sachs is banking, and banking generally should do well with higher interest rates, because who owns the interest rates? Who profits from the interest rates? Banks. So look at Goldman Sachs. As you can see, it is trending down over the last 5 days. All right. Instead of trending up, it's been trending down. All right. And then let's look at Tesla. Look at Tesla. So now it's been trending down. Tesla has a high multiple, right? Goldman Sachs has a low multiple, but look at them, right? So now look at this. Here's Goldman Sachs, right? And this is banking. So it should be doing well. This is 1 day, so it's sold off. Now it's coming back. Let's look at the 5 day. We just looked at that, right? But look at this. Look at the PE ratio of Goldman Sachs, which is banking. It is 639, right? Fair evaluation. Look at Tesla. Look at the PE ratio of Tesla, 304. Extremely high evaluation. But look at what they're both doing. And so this is uncertainty in the market. Now, today, Goldman Sachs has come up a little bit and Tesla is going down a little bit. Now, here's what I'm doing. As a matter of fact, let's look at this. So this is Goldman Sachs and Tesla in the 5 day, right? So in fear of what the Feds is doing, you see what's happening. The yellow is Tesla and the blue is Goldman Sachs. So in the morning, Tesla was running up, Goldman Sachs was running down. And as you can see, they're polar opposites, all right? Goldman Sachs started running up and Tesla is running down. And so oddly enough, I'm looking at the high multiple stock. I'm looking at the ones that have gotten beat down the most, and I'm trying to establish a buy pattern. And these are stock that I'm long in. So let's go to Tesla. All right, here's Tesla. So what I mean about that is look at the 5-day. When in doubt, zoom out. Tesla has been selling off, selling off, selling off. Didn't buy anything yesterday, and I'm glad I didn't. Didn't buy any Tesla yesterday, and I'm glad that I didn't, because Tesla is lower today than it was yesterday, as you could see, right? So I thought it was a falling knife, and it was. And for those of you that's been following me, you know I've been saying that I've been buying some Tesla every time it dipped under $1,000. Now, because of where we are in the market now, I'm going to be buying Tesla under $900. So when it gets under $900, I'm buying Tesla. Now remember, for me, this is a long-term play, meaning I am not, not going to be selling the Tesla that I buy. I'm waiting for 2035 when I think Tesla is going to hit $3,000 to $3,500, right? So that's what I believe. But Goldman Sachs, which is banking, I'm buying it as a hedge against inflation, meaning if inflation goes up, then the banks should prosper, all right? And the banks with the best multiple, fair multiples. Okay, good people? Hey, I want to show you this, and people say, hey, why do you change your plans? Because I'm going to keep playing this video, because you could be driving, everything is going along with your stock, and the weirdest thing happened. You could literally hit a cow. Okay? So that's why you have to be able to change your plans when the market changes. Depending on what the Fed say this afternoon, it could run the market up, it could make the market flat, or it could tank the market. It all depends on what the Fed says. So we have to be ready to move. Just like that old song, when you move, when I move, you move, we move. All right, just like that. All right, good people. So listen, remember the promo that's going on with Webull. Right now, deposit 1 penny. It's a limited time only. It's going to be over with before the month is out. Deposit 1 penny and now get up to 5 free stock worth up to $8,300 now. I have a link below. If you use my link, you will get some free stock. Okay, good people. We're going to leave it right there, and let's see what the Fed say. Live, love, laugh, and learn. We'll talk to you later.